Her birthday.
Lunch, like some caramel apple yogurt, apple and nuts.
You are live.
Looks like Paul is on board Tuesday.
Yeah, I see.
Tito.
It had to be myself and Gwen today, so I had 2 votes.
You ready, Jen?
Yeah. All set.
Afternoon. Could we stand for the pledge in a moment of silence, please?
Allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. Roll call, please.
Commissioner Kramer,
Present.
Commissioner O'Rourke,
Present.
Commissioner Rexroth,
Present.
Chairman Mussel,
Here.
Commissioner Ross,
Present.
Commissioner Elguy is absent for notice, and Commissioner Lowry.
Looking for a motion to either amend or approve the agenda.
Motion to approve the agenda as stated.
Support. All in support of the motion, say aye.
Aye.
Motion approved, 6-0. At this point in our agenda, we have opportunity for public comment. If anybody would like to come up and share public comment for 3 minutes with us, there'll be another public comment opportunity after at the end of the meeting. Anybody want public comment? Thank you. Well, the purpose of our session today is a review of the 2022 audit, and in talking with our administrator, it seemed appropriate that I take just a minute and introduce this, and then we'll turn it over to Deb and our auditor. But I wrote down a couple of comments I wanted to make. We're here today to receive, review, and discuss the 2022 audit. We have a long history of excellent audits. Our residents can take pride in our staff, our facilities, and our finances. Our financial position is the envy of most counties in the state. We have low debt, an excellent tax base, a fully funded retirement system, or almost fully funded retirement system, and an excellent relationship with our bargaining units. We also have an outstanding leadership team, county administrator, elected officials, and department heads. Our staff are second to none. Well, we're here today to review the audit for 2022. Unlike previous years, we are going to be talking with our auditor about some concerns, some weaknesses, some lack of internal control, and the need for improvement. This is not a surprise. 2022 audit findings are a direct result of the board's decision in 2021 to dismantle and reorganize a well-functioning finance operation and establish a separate finance department without, I think, the necessary implementation, transition, and staffing plans in place to do it right. We don't need to go into detail. We don't need to keep beating ourselves up on it, but we stumbled in 2022 with staff turnover, internal communications, lack of training, inexperienced staff, failure to use the expertise of those who were responsible for past audits, and inadequate leadership in some cases. Most importantly, I believe our board micromanaged a reorganization plan without allowing the former administrator to develop an organized and effective implementation of the staffing plan. I'd like to recognize and thank those individuals that have helped us move forward, get a fresh start, and get us back on the road to having the kind of audit that I know Melinda Lautner and past commissioners are used to having. I'd especially like to thank our administrator, Kathy, the clerk's office, the treasurer's office, and all of the people that have made 2022 a challenging but productive and I think good year. We welcome our new finance director. Jeff is going to introduce him to the county, and we look forward to a very good 2023 audit. Thank you very much. With that, before we turn it over, if any commissioner would like to comment on my comment or say anything that you may, I thought it important to make those comments. We sometimes the board struggled in putting this organization plan together, but I think we're on the right track. And I think we may not have done it well, but we ended up where we wanted to end up. Anybody? Yeah.
I have this comment to say, Ty, I think that was very opinionated. I think it was misstated in a lot of ways, and I don't think it was necessary. And I think a lot more could be said, but I don't think a lot more should be said right now.
Okay. So, thank you, Ben.
So I'd like to, as Ty alluded, we have our new finance director, Sean Cohen, with us today, and also a new position, assistant finance director, Kathy Hartsfeld. So I'm very encouraged that with the leadership of these two individuals and also Christine, who's our accounts clerk, we have established, I think, what will prove to be a very effective and productive team. And of course, we still continue to look to clerk's office for some direction on that, but I'm very encouraged. And I think that what we're going to hear today in terms of the things that maybe didn't go well in 2022, I do think that we have addressed a lot of those things and are moving forward in a very positive way. So while this is a learning experience, the reason why I had recommended to have this meeting was in recognition of the fact that we have 4 new commissioners that have not been through this process before. Myself being 6 months into my role, and this is the first time that I've been through this process, and knowing that we also have a new finance department. So I thought this would be incredibly helpful for all involved. And so I am extremely grateful to Steve Peacock from Raymond as the principal of that organization for taking the time out to come and to do a deeper dive on this document so that we all can learn from these things and move forward in a very positive way for the county.
So welcome, Mr. Peacock.
Well, thank you, Commissioner Wessel. I am not the principal. I am a principal, along with my comrade, Mr. Matz, over here on the screen over here. So there are several principals in the firm, one of which is me, as well as Paul. So we serve Leelanau County. I'm a Leelanau County resident. You are my new commissioner. I have not yet met you, but yes, nice to meet you. And I look forward to coming up here and chatting with the board every opportunity I can. So thank you. Ready to go? All right. So Belinda, you've probably heard this 30 times from me, maybe not 30. And Mr. Wessel, you've also heard this from me many times, but I'm going to do a little different approach because we have 4 new commissioners here. By a show of hands from the 4 of you, have you guys all gone through a governmental audit report before? Oh, okay. So I'm going to do the basics. I'm going to kind of walk you through what the report, but we'll do the report at the very end, but what sections of the financial statements are, what they mean. If I were in your chair, what would I want to know? That's what I think my job is to make sure you know what you need to know for your role with Leelanau County. Paul, you can interrupt me, you can add color wherever you would like, but I know you have to run at 3 o'clock. So I'm planning on being here an hour, hour and a half, and I'll stay as late as you want to answer any questions you want. Up to, and about midnight is when I start to melt, so. Okay, if anybody has questions along the way, please do not hesitate to interrupt. Let's get them cleared up as we go through, some of which I may have to lean on folks in the room for some questions on. I do not have your audit work papers with me. So if there are questions that are asked that I don't have an answer for, I'll either get the answer for you or lean on somebody in the room that may have the answer, either John or Jen or somebody along the way. So. Sound good? Good ground rules? Okay. There are two documents that have been circulated to you. One is a 138-page report, and I think most of you have that via electronic, or do you guys have a hard copy too? Okay, it's gonna be easier to talk about this with the hard copy. Okay? Governmental financial statements are very, very, very lengthy, and they are very, very, very detailed. Your report is about 100 pages longer than General Motors report. Oh, yeah. So when you get into governmental accounting world, the federal or the public oversight on these financial statements just blows everything up. Okay. You're spending the taxpayers' dollars. So it's all about disclosure. Okay. So that's why governmental audit reports are lengthy. The Wayne County, City of Detroit, those are mammoth documents. And General Motors is a little booklet that's hundreds of times the size of the City of Detroit for Wayne County. So be that as it may, that's what we have to deal with. These are the governmental reporting standards that we live in, and we have to comply with until they're changed. And I don't see them changing materially in the remainder 7 years I'll be doing this, but maybe in Paul's lifetime, they may change and condense a little bit. But let's start with the big 138-page document. Obviously, the page 1 is a cover page. 2, 3, and 4 are your table of contents. Our audit report begins on page 5 and is now a 4-page document. Some of you up there may remember when this was a single-page document, but it is now 4 pages. And I'm going to leave this towards the very end to talk about. Okay, so let's start on page 9, management's discussion and analysis. This is a document that is prepared by management. This is not an audited document by the audit firm. Okay, yes.
I'm not sure that this, so this is where we're starting, page 9.
Yep. Oh, I'm sorry. Okay, hang on.
Four numbers up, so.
Okay, I'm going from my PDF top. Okay, all right, let's go on the bottom page numbers then, beginning on page 5. Management's discussion and analysis.
Thank you.
Yep. This was adopted several years ago by the Governmental Accounting Standards Board, which is the standards writer for governmental units. And they thought, well, there's a lot of numbers here. People look at this and they can get a little bit mesmerized. Let's make it so the general public can read the financial statements. So that's what this document does. It puts some very technical information that follows into a more readable format. Okay? That's what this document attempts to do. This is not an audited document. Our opinion does not cover this document. We read it to make sure it's consistent with the financial statements that follow, but we do not audit this document. Okay? A lot of useful information in here, much more readable than what's going to follow starting on page 15, but that's what this part of the financial statements entails. Any questions on that? All right, on to page 15. These are the formal financial statements that we are required to report on when we are engaged by the Board of Commissioners to do the audit for the county. Couple points to note. Financial statements for governments have 2 balance sheets and 2 income statements. Okay, on page 16 is your first balance sheet. They might have different names. Upper left-hand corner, statement of net position. So this, in my world, is balance sheet number 1. We'll talk about balance sheet number 2 in a minute, and we'll talk about income statement 1 and income statement 2 as well. And there are reconciliations that follow that reconcile between the 2 different balance sheets and income statements that are also required to be audited during the performance of our audit. So page 16, this is the granddaddy of them all, as I like to say. This has everything you need to know about the county. This has all of your assets. This has all of your liabilities, all of your deferred inflows and outflows, as well as net position. So you'll see a stark difference when we look at the other balance sheet, but let's talk about this balance sheet. First column, governmental activities. This is going to be the activities of the county in its normal and ordinary course of business in functioning as a Michigan county. Your general fund, your special revenue funds, your capital projects funds, a whole plethora of different funds that will roll up into that column. Okay. Business type activities. These are funds that look, act, and smell like a commercial business. So that's why they're called business type activities. The predominant fund in here is your delinquent tax revolving fund. Then you have a total column there. And then your component units. What is a component unit? Component unit in this case is primarily, and the biggest numbers come from the road commission. These are separate governmental units governed by different boards that are required under the governmental standards to be reported alongside the financial statements for the county. There are other component units. We'll talk about those in a minute, but the major one in here is going to be your road commission. So let's start under the total column. Total assets for the county of $55.7 million, comprised principally of cash, receivables, and then capital assets. As expected, that's what you would find in a governmental unit. Your deferred inflows and your deferred outflows relate primarily to pension and leasing activities. I won't comment a lot on those until we get to that section of the footnotes, but that's what the next subtotal is, your deferred pension amounts. The next section of this financial statement, the next subtotal is the liabilities. $22.4 million in overall liabilities for the county. You've got your normal trade accounts payables of $1.4 million, some unearned revenue, leases, and then your long-term debt and your pension liability. Okay. Deferred inflows, again, this is going to talk about taxes you have collected for a subsequent period, leases, and pensions. The very last section of this financial statement is your net position, or assets minus liabilities, if you will. You've got invested in capital assets such as this table, this chair, this building of $14.9 million. And then you have restrictions on certain portions of your fund balance or your net position. Restricted for capital projects, health and welfare, other state mandated programs, and then your bottom line, unrestricted of $14.3 million. As Commissioner Wessel mentioned earlier, this is a healthy balance sheet for a county. You've got a lot of fund, a lot of net assets on your balance sheet. So you've got a very healthy county. Are there questions on this particular balance sheet? And if there are not right now, we can always come back to it as we work through the document. All right, hearing none, I'll work through to page 17, and this is income statement number 1. And if anybody in the room is used to looking at a commercial income statement, this looks nothing like what you've seen. We start with expenses first, and then we allocate program revenues across the top, charges for services, operating grants and contributions, capital grants and contributions, net revenues or expenses, if you will, on the far right-hand side. $17 million net expense for governmental activities. And then you go into these business type functions, delinquent tax collections, building inspections, inmate commissary, treasurer's tax reversion. Overall net primary government, you had a $16.3 million net use of cash, okay? Now that's a big scary number. Let's not panic yet. Go to the next page. And you'll see those numbers translate across the top here. There's your $16.9 million of governmental activity expenses. Your $626,000 for business type. Overall, $16,356 net use of cash during the operations of the county. Now you apply your general revenues, your property taxes, grants specific for programming, unrestricted investment earnings, gains on capital assets, other revenues, etc. So if you look at the second 1, 2, 3, 4th line from the bottom, overall general revenues and transfers of 14.9 million, business type 116,000, total of 14.8. I'm not going to talk about your component units. Those are a whole different thing. We'll talk about that as a group in a minute. So 3 lines from the bottom, change in net position. That would be akin to net income if you were looking at a commercial income statement. So the governmental activities had a net burn of $2.1 million, reducing your net position from 26.7 million to 24.7. Your business type activities had a $511,000 increase from 7,984,000 to 8,495,000. And in total, the net was 1.5 million loss And you add that to the beginning balance of 34.8, you get to $33.2 million in total net assets. Any questions on that? Just making sure I'm keeping you guys awake here. All right. We've seen balance sheet number one and income statement number one. Now we go into page 20. And this may be the way you're used to seeing internal financial statements. This is governmental fund accounting. So you see the first one and there's the general fund. And what is missing in this particular balance sheet? All your fixed assets are not on here, and neither is any of your long-term obligations. So balance sheet one, I'll call it an accrual basis financial statement. And this balance sheet number two on page 20 would be more like a cash basis balance sheet. Okay. So when you open up 20 and 21, going across from left to right, general fund is going to have the majority of the activity in here. And then you have senior services, special revenue, you have communication towers, Village of Northport, and then all of your non-major governmental funds. And those are found on page 94 of your supplemental material. And how do we know what goes where? It's all based on materiality. So if a senior services special revenue fund passes a materiality threshold that requires its own column in the financial statements. The ones that reside on page 94 are small enough where they are not material enough to require a separate column. They're smashed together and they're put under this column called non-major governmental funds. Does that make sense? Because if you go to page 94, sorry, not 94. That will be 90. You will see there all of the other funds that make up that total on page 21. All of your special revenue funds, your debt service funds, and your capital project funds roll up to that $4,237,000 number that also resides on page 21 as the total under non-major governmental funds. And as we go further and further into the page 90 and beyond, there is a ton of very detailed fund accounting that I generally don't comment in the audit presentation, but we'll go through so you guys have an idea as to what's in there. So you're not, when you look at this and go, well, he didn't talk about this, well, then you guys will know why. Okay. So let's go back to 20 and 21. General fund. And I specifically talk about the general fund primarily because this is your biggest fund that has the most activity here. $14,056,000 in total assets, comprised principally of cash and cash equivalents, restricted cash and investments. Again, you don't see any fixed assets in here. There's no buildings, the table's not in here, the chair's not in here, that picture's not in here. This is just cash receivables, prepaid items, more on a cash basis of accounting. Liabilities, $4.6 million, consisting primarily of accounts payable, unearned revenue.
Steve, I'll just mention there real briefly, just as an FYI on the unearned revenue, since that is a pretty significant dollar amount. What that relates to are the coronavirus state and local fiscal recovery funds that had been received but were not yet spent through the end of December 2022. So that's what that number represents.
Thank you, Paul. Then you have, following the unearned revenue, you've got the deferred inflows of resources. Again, you collected some money in December that was for the following fiscal year. That money resides in that balance. Then you have fund balance. That's what most folks that sit at your chair get asked by constituents. What's our fund balance? Is it enough? Is it enough? Is it enough? This is where you're going to answer your question. Non-spendable fund balance is 119,000, and that primarily relates to prepaid expenses and the like. But the unassigned fund balance is what you have. That is the board's ability to make decisions financially for the county, knowing that you have $9 million in reserve on the general fund. Okay. So that is another healthy barometer of what the county's doing. Does anybody have any questions about fund balance? Yes,
The unearned revenue as a unspent COVID relief funds, is that what you said?
correct.
So just curious, so that's money that we have received that we haven't spent. And that exists as a liability on this sheet?
Yep. If you don't spend it, you got to send it back. So your intention would be to spend it sometime after 12/31/22.
So for the benefit of this discussion, if we were to spend it all tomorrow, it goes away as a liability.
Correct. It'll flow through the income statement as revenue, and then the expenses match, and it should match dollar for dollar unless there's a county match or some other requirement in expending the money.
Not a liability as you would traditionally consider, like payments on a loan, or
Nope.
it's actually a zero amount. It either amounts to money we spend or money we have and we get back. We don't have to sell. I just want to make sure I understand.
Very much like if you collect property taxes on December 28th for the following fiscal year, that's unearned revenue. You know you're going to use it in the subsequent year, but in this case, it's a different composition. This is COVID relief funds. Yes, ma'am.
And even though it's committed, it still has to show up here.
Correct. Yep. That is correct. Any more questions on this income statement? You guys will be teaching the class by the end of this presentation. All right, page 23. This is a reconciliation of balance sheet 1 to balance sheet 2. Top line is your fund balance for governmental purposes, and the bottom line is your net position. If you look in the composition of what is missing or what is added here, you'll see your capital assets. It's a big number, $17 million. Your long-term or short-term financing, any debt-related obligations are in here. Internal service fund matters, liabilities related to bonds, leases, et cetera. All of these numbers reconcile balance sheet 1 to balance sheet 2. Once we get the 2 balance sheets done and we get it reconciled, we know we're in a pretty good spot, that we've got a balanced balance sheet and everything seems to be going together well. I wouldn't expect you to spend a lot of time in here unless you had specific questions about what made up the difference. Yes, sir.
Just one, unavailable installment sales agreement and interest receivable of 4.4 million.
Do you have leases or contracts where you will be collecting revenue after the year end as a receivable? That comes out of here. So you would have, so you got leases that you're going to collect money on for the next 10 years. It shows as receivable, but it's not in the fund balance financial statement. Anything else jumps out of there?
You related to AR.
Correct.
uh,
Yep.
We're looking at a private.
Correct.
Thank you.
You are correct. All right, so now we've got the balance sheets 1 and 2 presented. We've got the reconciliation presented. Let's go now to page 24. 24 is income statement number 2. And this looks very much like balance sheet number 2. It's in the same format. You've got the general fund, the special revenue fund, communication towers, Village of Northport, et cetera, and all your non-majors that come from page 95 roll into this income statement number 2. I'll talk specifically from the general fund column. $14.6 million of total revenues in the general fund, comprised primarily of property taxes. You got some intergovernmental support, charges for services and so forth, but the major component of that is your tax base. The middle section of this report are your expenditures to operate the government. These are the state of Michigan chart of account classification, legislative, governmental, general government, judicial, public safety, et cetera. Those are issued to us that we have to follow this format. Some people might like seeing payroll, utilities and so forth. We are required to have it in this format for governmental reporting. Overall total expenditures of 14.9 million. You had expenses in excess of revenue by $362,000. You had a sundry amount of net transfers, $6,300. Overall net reduction, third line from the bottom, Net reduction in fund balance of $356,000. You add that to the opening amount, you end up at $9,094,000. Any questions on that? All right, we're getting close. Page 27 is income statement reconciliation that reconciles income statement 1 to income statement number 2. Same format, generally the same composition as what the balance sheet reconciliation looks like. And the theory is the same. Once we get income statement 1 done, income statement 2 done, and then we balance it, all those items roll out to be the differences in the 2 income statements. Any questions on the reconciliation? I'm going to pause for just a minute. Paul, we're through with balance sheet, income statements 1 and 2 with the reconciliation. You got anything you want to add?
I think that's been well said. The only one item that I will mention is if you were a commissioner last year, you may see some new information this year related to leases on the various pages. There were new accounting standards that first became required in 2022 to bring some of the lease items onto the balance sheet. So there may be some new information there, and there's certainly some footnotes that discuss the nature of them as well. So that's the only thing I wanted to mention. Just, if you've looked at the financials last year, noticing some differences this year related to leases, it's simply because a new accounting standard required them to be put on the balance sheet.
Everybody's favorite topic in public accounting is leases. So don't shoot the messengers, please. We are just bringing the accounting standards to you. I don't know if I have one client that's super happy about the leases, but be that as it may, we've got to follow the rules. So thank you, Paul. Anything else?
Other than just as a heads up, next year, all of the software that is essentially being leased will be recorded. So more to come. The standards continue to, you mentioned, Steve, up front about maybe things will eventually start to reduce in my lifetime. I just don't see it happening.
I'm with you, Paul. What hope springs eternal.
It does.
All right, let's go back to page 28 of the document. So we've already seen the income statement on page 28 for the general fund. This is now required to have, we're required to have a disclosure about how you did against your budget. Okay, so this is your original budget in the first column. You amended the budget periodically throughout the year. You've got your final budget. The actual fund performance was in the third column, and then your overall performance against on the right-hand side. Certainly, were I in your chair, I'd spend some time here. Like, how do we do? And you'll see you just about pegged revenue within 10,000 bucks. That's pretty doggone good. But more importantly, I would focus on the expenditure side, and there's a reason why. So let's just keep looking down this column on the right-hand side. All your expenditures on page 28 are underspent, which means you gave management the authority to spend, and they did not spend exactly what you told them to. They were underspent. Moreover, if you are ever overspent here by as little as $1, we are required to report that to the state. So it is very, very important that you budget appropriately at the beginning of the year, and then more also at the end of the year when you're looking at accruals that might be coming in at the end of the year. You make sure you account for your accruals, because you cannot amend your budget after the end of the year. It has to be done prior to the end of the year. The county has always been really good on this. They've been very accurate in doing this. We've not had any significant issues in here. So let's go to page 29. This is the next page of governmental expenditures. Let's just focus on the far right-hand column. You guys get another gold star. Everything is underspent. Okay. Page 30. This is going to round out the general fund. You are underspent in this page, another gold star. Okay, I just want to make sure the new board members know that it's, even if it's $1 over, it gets a special footnote added to our footnotes that we'll talk about here in a moment. So right now, under the general fund, you are all underspended in all categories, so that's good news. Page 31. Oh, and by the way, the state doesn't care if you budgeted revenue right or not. They don't, there's no concerns on the revenue side. It's only on the expense side. As you'll see on page 31, you've got positive and negative variances in the revenue. One might ask, well, if we're over or under in revenues, does the state care? No, they don't. They only care about the expense side. So on page 31, this is your senior services special revenue. Under your expenses, you were underspent under health and welfare by 42,530, and your transfers out were right on. So no findings related to that particular fund. Yes, sir.
If we had set a budget that said we had $1 of revenue and we only got $1, and we set a budget for 286 billion in expenses and we were right on, the state would be happy with that report.
Conceptually, yes. Yep. It's an amazing theory. Yep, it's an amazing theory. Yep. I do have one client that it's in the government world and has a little bit of oversight by the Michigan Department of Education. They concern themselves with revenue, but the state treasury's office, I've never seen a Paul, have you ever seen a correspondence from Treasury on the revenue side?
Absolutely, I have not. I know there's been some comments if there's deficits multiple years, but as far as looking at budget to actual numbers, no, I don't think the state cares at all about revenues. And you could over budget expenditures by hundreds and hundreds of thousands and they wouldn't care. But if you spent $1 more than was authorized, you'd be getting a friendly letter from the state.
Yep. All right, on to page 32. This is our communication tower special revenue fund. Again, same theory. Your current public safety was underspent by 49,611. So everything on this fund underspent, gold star. And you'll notice that the budget to actual comparisons are only the major funds, the general funds required and the major special revenue funds. There are dozens of special revenue funds in the back that are not required to have this reporting because they're not material. Take it. They're not material one at a time. In the aggregate they are, but they're not one at a time. Okay. All right. Just when you thought you were out of the water. Let's go to page 34. I'm sorry, 33. Page 33, proprietary funds. These are funds that look, act, and smell like a public business. As we talked about earlier, the main fund in this particular account type is your unpledged delinquent tax revolving fund. So that's your first column here. You've got building inspections that look, act, and smell like a commercial business. All your non-major enterprise funds, which are found on page 106. And then you have a total and then internal service funds. Those are funds where, let's say, motor pool, copier, postage, where they put all the costs into one fund and then they allocate it out to the different other funds. Yes.
Steve, just for reference, sometimes commissioners, you'll hear the term DTR.
Yes.
DTR fund, so that's what this delinquent tax.
Yes.
Revolving fund, that sometimes I know our treasurer gets concerned that we look at that too much like a piggy bank, so we just need to be mindful that it's not our safety net. However, we do often look at that for major projects, so. Thank you.
Thank you, Debbie. I know that the DTR is the vernacular up here. I should have used that. Okay, so let's talk about the total column on page 33. Total assets in your proprietary funds of 8.5 million, and that is consistent almost primarily of cash. You got some liabilities, current accounts payable, accrued liabilities to 54,000. Overall unrestricted net position in these proprietary funds of 8.5 million. Big chunk of that again is DTR. Questions on that?
Yeah, just, so the DTR fund, there's parts that go out every year as well. But this number that I see on this page is net of any of those liabilities? You don't have it?
It would be, what you're seeing here is that fund has $5.8 million in cash,
Okay.
853,000 of delinquent tax receivables, and the interest thereon.
But out of those amounts, none of that is committed to go anywhere because I don't see anything under the liability
No.
section that amounts.
No.
So those,
No.
it's available
Yep.
cash, maybe changed by cash flow that you get concerned about that, right? That's timing, taxes in and taxes out, why you don't spend it all because you have to hand out. Thanks.
And the use of this for special projects has historically been how this board has used that fund. So they've used it sparingly. That's why the balance is where it is, but that's what the main purpose of that particular fund is. On to page 34. This is the income statement for these proprietary funds. Speaking from the total column, second from the right. Total operating revenues of $1,554,000. You have some expenses, salaries and fringes, other operating expenses, total of $928,000. Overall operating income of $627,000. You had some investment income of $16,747. Transfers in of 25 grand, transfers out of 157,000. Third line from the bottom, excuse me, $511,000 net increase in your net position from the prior year. So if you think about these are funds that operate like a business. You would presume they would be adding every year, right? And that's what this has done. So this is functionally doing what you would anticipate a business type fund would do. Now, conversely, if there was a big project that you took money out of DTR, you would see a transfer out that might have this go down. But in 2022, that did not happen. We operated normally and we had a net increase in our net position. Okay. On to page 35 and 36. Now, if we weren't confusing you enough to start with, you haven't seen a cash flow statement until we get to page 35. Under the Governmental Accounting Standards Board, GASB 34, you are required to show a cash flow statement for your proprietary funds. You do not show those for your governmental funds, but all of a sudden you see on page 35 and 36 a cash flow statement. Same columns, DTR, building inspection, non-major enterprise, and the total. So let's talk about the total column. Were I in your chair, that first subtotal is the most important to me, $678,000. What that tells you, the reader, is that the operating activities of those funds are generating cash. If that 678, which is the first subtotal under the total column, is a negative number, then something's not right. So, some facility or some fund is operating at a cash loss. That is not the case. DTR 393, building inspection at 228, non-majors at 58, total is 678,000. So that's good. You're generating cash. Now what'd you do with the cash? That's the next subtotal. You added some more by transferring 25 into the non-majors, but then you transferred out a total of 157 in total. So you burned some cash of 132,000. Fourth line from the bottom, you received interest of 16,747 overall change in cash. Now, this is your change in cash position. This is not your net income. This is what happened to your cash. Cash went up by 562 grand. So this is functioning exactly the way that we would expect to see your proprietary funds. The next page, on page 36, if you notice the subtotal or the totals at the bottom of page 36, We'll reconcile back to the first subtotals on page 35. This is yet another way to calculate the operating activities balance. So again, once we know that page 35, we've got the right numbers in there. Page 36 is another way for us to prove that those numbers are accurate. And again, that's that line on page 36, that double underline section. Were I in your chair, that's what I want to pay attention to. Everything is pointing in the right direction. Any questions? All right. So I've given you all sorts of information about governmental accounting funds, special revenue funds, capital project funds, proprietary funds. Now we're going to go into the final set of funds that are covered by our report, and that's on page 37. 37 is a fiduciary fund. Think of that as a fund that you are holding money or other assets on behalf of somebody else. So let's go through an example. You do tax settlement, and you're collecting money for the school system. That money's not yours. You have to revert that over to the school system. That would flow in and out of a fiduciary fund, if you will. It goes pretty quick. County doesn't keep a lot of money on hand that doesn't belong to them. It's sent out as soon as it's practical to get the checks cut. So this numbers, I'm not surprised these numbers are as small as they are. And I would expect them to be small. The county's always been good about getting the money out of the county that doesn't belong to them. So on page 37, you see you got about $500,000 in cash, $450,000 in due to other governments. And then you've got some that are restricted for other individuals, organizations, or any other government. Page 38 kind of tells you the story of what went through there. So while the numbers on 37 are relatively small, you'll see overall collections were $25 million in, $25 million out. Overall change of about $19,000, which again tells me that these are functioning exactly as I would expect them to. Any questions on that, or just think of those funds as funds that aren't yours. You can't touch those. Or the county can't. Paul, you got anything you want to add about those?
No, again, I think that's well said. And as you stated, we've never had an issue noticing that the county has held on to those for an inappropriate amount of time. So no concerns here.
All right. The last two financial statements that we'll talk about before we get into the footnotes are on page 39 and 40. Now, we talked about this thing called a component unit. These are authorities that have generally their own board of directors, but they are still yet to be required to be reported under this county. The biggest one here is the road commission. We are also your audit firm for the road commission. So these numbers come right out of our report from the road commission. Brownfield is an internal fund here with not fund internal activity in the county. We also subject that to our audit as well as the land bank and performance of the county audit. Okay. Again, these are separately legally organized authorities. So total assets going to the total column, $43 million, $38 million of that is your road commission capital assets, trucks and so forth that the road commission has. So historically, this financial statement has been very heavily road commission. You've never had a real super big component unit that was bigger than the road commission. The counties historically, the road commission has been 85 or 90% of this entire financial statement over time. You got some deferred pension amounts that relates to the MERS pension at the road commission. Overall total liabilities in the total column, $2.1 million. Taxes that were levied, collected prior to the period of $1,558,000. Overall net position of the component units of $39,982,000, which is a pretty doggone healthy net position. Now that's not all cash. If you look at the invested in capital assets at $38 million number there, that's again primarily road commission. So that's going to be fixed assets that the road commission has: tables, chairs, trucks, cars, and so forth for the road commission. It's not cash that the board can choose to spend. It's money that's invested in fixed assets. Yes, sir.
What would be capital assets of the road commission that are not being appreciated?
Land is not depreciated. Certain elements of infrastructure. And we'll get to that part in just a minute. Yeah, there's a whole section back here. So. Okay, on to page 40. It shows the income statement. Starts out with expenses. Again, looks kind of weird from a normal income statement where that normally starts out with revenue. Under government world, we've got to start talking about expenses. 9,170,000 in total expenses. Total program revenues is 7.4 million. Net expense, I'm speaking from the total column, about halfway down. 1,784,000 in total net expenses. Now you go back and you apply the property taxes, unrestricted investment earnings, and gains on sales of assets. 1,596,000. Overall change in net position of 186,823 in total. Principally, road commission burned some net position of 233. The brownfield redevelopment added 37, and the land bank authority added about 10,000 bucks. Questions on there? Paul, do you have any comments about the road or about the component units?
Nothing in addition to what you stated. Certainly the focus there has been on the road commission, which, as you indicated, we do separately audit. I know that we separately present to that board as well. So certainly the road commissioner board is well versed and well updated on that financial information as well. So it is about 250, Steve. So I will be sneaking away here in a few minutes. But I think from the basic financial statements, you've touched on everything that was on my radar to share with the group.
Okay. So when you sign off, you're over my left shoulder. So when you sign off, just go ahead and sign off, and I will continue on the presentation here.
Okay.
All right, beginning on page 42, these are the footnotes. 42 goes all the way back to page 78. So I'm sure you'd like me to sit here and read these to you verbatim. I'm going to choose not to do that. All right. Let's talk about the highlights. And I'll go by footnote number. Footnote number 1 that begins on page 42 talks about the summary of the significant accounting policies used by the county. The reporting entity, it defines the reporting entity. It defines your discretely presented component units, which we've talked about on the previous balance sheet, road commission, brownfield redevelopment. On the next page, land bank authority, then all your regional joint operations, the health department, the airport commission, and the court systems are defined in the middle of 43. The bottom of page 43, all of 44, all of 45, and the top of 46, all is dynamic reading if you're wondering about why governmental financial statements have 2 balance sheets and 2 income statements. So we kind of walk through what they are, what the numbers are. This is the reasons why. These are the governmental accounting pronouncements that require us to do that. And it also defines what certain funds mean. Yes.
On the Milford sewer, I don't believe they haven't defaulted on their payment to us, but I've heard it's been very close, and I don't know any details. Maybe Ty, you know a little bit about that.
That is going to be the agenda for the Public Works meeting.
Okay, I'll make it here.
There, I think John would say we're not at any risk,
Okay.
but
We're not at any risk.
Our risk would be owning it, right? We don't want that, so
Or defaulting.
if they default, we would own,
Right.
and that's what we don't want.
Right.
Okay, all right, thank you.
Any questions? Okay, so in the middle of page 46, with the first bold-faced caption, assets, deferred outflows, liabilities, deferred inflows, and equity. So various line items on the financial statements, deposits and investments, receivables and payables, leases. This is a new section on page 47. These are the accounting policies related to those financial statement captions. So deposits and investments, there's your accounting policies, receivables and payables, there's your accounting policies, page 47. Here are all the new requirements under the new lease standard that you have adopted in 2022. So that is a whole new page of accounting terminology that came out of the new GASB pronouncement that the county has adopted. Page 48, your accounting policies as it relates to prepaid items, capital assets, assets held for resale, deferred outflows. On to the next page, compensated absences, which is basically paid time off, long-term obligations, deferred inflow resources. On to page 50, your fund equity policies, therefore, inter-fund transactions. These have all remained consistent year over year with the exception of the leasing pronouncement, which is new this year. Page 51, your accounting policies as it relates to pension. And every financial statement has certain elements that are based on estimates. So that is required language in there that we must talk about the potential exposure for estimates. Page 51. Footnote number 2, these are your policies related to your budgetary information. Now, had we had a financial statement line item that was over the budget amount, you would now add footnote number 3, and you would explain in detail what line item was over. And I think that's one of the first places state treasury goes to look on the financial statements, to look to see if there are budget overages. And then the county will get a letter from our friends down in Lansing. What we talked about was accounting policies. What we're getting into now in 52 is the details. So deposits and investments, footnote number 3. Here's your cash and investments, your restricted cash, between the statement of net position, your fiduciary net position, and then where are they? That's the bottom half of that table. You got cash on hand of $800, checking and savings accounts, certificates of deposits and investments. So that's what those are. The second half of that talks about various custodial risks as far as investment houses holding your funds, banking holding your funds. That's defined at the bottom of 52. 53 across the top. These are your investments, where they are, what their rating is, and their expected dates of maturity. Further discussion on credit risk, interest rate risk, concentrations of credit risk, round out that footnote. And then we talk in length on 53 and 54, what level these investments are. And these are classified primarily as level 2 investments based on the marketable valuation of those securities. Further information at the bottom of page 54 on the class governmental investment pool. Rounds out deposits and investments, top of page 55. You've got the details on your receivables. Excuse me. Footnote 5 is your details on your accounts payables and accrued liabilities. Interfund receivables rounds out page 55 with a table on 56 that shows where it came from and where it went. And all your transfers in and transfers out and related advances to component units and so forth. It's very important that those two columns balance. Right on to 57. This is a roll forward of all your fixed assets. So I think Commissioner Rexroth, you asked the question 57. Capital assets not being depreciated in the county government are land and construction in progress. Okay. So we wouldn't depreciate anything that's still under construction. We would wait until that was placed in service. So there's all your beginning balances, additions, disposals, transfers, overall ending balances, and the beginning balances were updated for the adoption of the lease standard. The distribution of depreciation expense rounds out on page 58 where that is charged. Most of it is in the general government, you have public safety, public works, recreational, and cultural, and then internal service funds. Similar financial, or I'm sorry, similar report on 59, but this is specific for the road commission. So pay attention to the captions in the upper left-hand corner. Because the road commission is so large in terms of numbers, some footnotes will have road commission numbers in it. This is one of the sections that will have road commission information in it because it's so big, the numbers are so large. So in the road commission, you've got land, infrastructure, which would be the roads, and then some construction in progress. Those are the items that are not being depreciated. Again, same roll forward from the beginning, the additions, the end, the disposals of the end. That wraps up the asset side of the balance sheet. Now let's go to the liability side on page 60. You'll see it's a similar format, beginning balance for your different instruments of debt that are outstanding. Beginning balance, there were no additions during the year. The deductions that were being paid according to term, ending balance, and then the principal amount of each one of those obligations that due within the next 12 months. Compensated absences is unpaid PTO to employees here at the county. So that'll have in the 625 as it's been earned, the 597 is as it's been paid out throughout the year. Page 61 rounds out this. You'll see the Brownfield Redevelopment Authority has its own section in there. The Road Commission does, as well as the BTAs. Exact same format though, beginning, additions, deductions, and ending balance. The next three tables talk about how much principal and interest is due in the next 5 years. The next 5 years, it's 1 year at a time. After that, you'll see on page 62, there are some obligations that roll out to 2028 and 2032, and then a final payment on 2033. So that is just for planning purposes. As people are looking at your financial statements, bond raters may look at that and say, okay, do they have the cash flow to pay off these obligations? And I could make a heck of an argument that yes, you do. Okay, now we get into some more policy type related footnotes. Footnote number 9 talks about your risk management. The Michigan Municipal Risk Authority. Top of page 63 shows your workers' compensation fund and what has transpired in that particular fund in the last 2 years. Again, if we had a serious issue on risk management, you would know that before we are having this meeting today. Halfway through, yes.
Is you got the estimated liability actually going down for workers' compensation,
Yep.
but we have actually more employees, does that?
Well, if you look at the paragraph right before that table, the county has transferred the risk of loss for workers' compensation and health insurance via the purchase of commercial insurance
Oh,
policies.
it's the insurance, okay.
Yep. All right, so on to page 63 in the middle, risk management, I'm sorry, contingent liabilities. Every organization, whether you're a county or a commercial business, are subject to potential contingent liabilities. This talks a little bit about what might be relevant for governments, such as grant-related funds. If you did something wrong with grant-related funds, if you did something wrong that violated the Michigan Property Tax Act, the county could have some contingent liability. We did not find any, but it's just simply narrative that we must have included in the financial statements. I'm sure you have, well, you have several, there are lawsuits that are pending. All of our clients that operate in the public sphere have lawsuits that are pending, but none of those rose to the level of concern from the audit perspective. And we do confirm that with the county's attorney. 64 footnotes 11 and 12. Let's talk about 11 real quick. The property taxes. This talks about the levies and what the property tax rates were and the tax base are. Again, very standard language from the from the prior year. Now on 64, middle of the page, footnote number 12. All the way. To page 73. Folks, there's a lot of very technical pension accounting language in that footnote. It's a yawner to write. It really is. And I will save you the process of having to read that because there is a table in the back of the report that summarizes all that we can talk from. Okay, so let's go to page 74. This is new. These are all your lease footnotes. So the county adopted the new accounting pronouncement for 2022. It shows the asset type. Leases, these are all governmental activities. Net present value of the future of minimum payments for 2022. You'll see them there. This is very similar to your long-term debt. You're going to collect principal and interest all the way out to 2047. So this would be a new footnote from the prior year. On page 73 rounds out again with a roll forward from the beginning of the year as amended. Remember, we adopted GASB 87, so we had to set that balance up to make it compliant. And then you will see the additions, the deductions, the ending balance, and then that last half talks about the allocation for the towers. Nobody likes the lease pronouncement. So it's added what, 3 pages to your footnotes? Pages 76, this is requirement of GASB 54. It's a kind of a blow up of your fund balance. Whereas you saw on the financial statements, you saw non-spendable, you saw restricted, and you saw committed. These are all the dirty details as to where these fund balances are committed to. So go to under the restriction in the middle of 76, you've got ROD automation, $134,000 that's restricted for that. CDBG administration, I'm just grabbing a couple of them here. Early childhood, communications, brewery check drain, or creek drain. So you'll see there's a variety of those that rolls over to page 77. And then you'll see those are funds that are actually committed for capital projects, veterans camps, maintenance, and law enforcement. So that's a bigger detail of your fund balance, if you will.
So, I mean,
Mhm.
we've got committed for capital projects, but not, what is that fund, or is it not considered a capital project because it's a contracted service out? Would that not be in here, or will that show up somewhere else?
That is not in here. That is,
Not an asset.
this is a net asset.
Not an asset, it's just gonna be a pass through.
Oh, okay, so you're going, John.
Yeah, we had a good discussion with Paul.
Okay. Okay.
We don't own the fiber. The county doesn't own or maintain that
Well,
fiber.
we had the 4 million show up.
You're contracting with somebody because that's your ARPA funds.
Right. This capital projects could be for a variety of things. And we have the detail in the audit work papers. I just don't have those here with me at the moment. So everybody sees big numbers in footnote number 15 on the balance sheet where it says investment in capital assets. This is a reconciliation of that. Like, what does that mean? So there's your under the governmental activities, you've got $18.7 million of assets either being depreciated or not being depreciated. So then you have to tie with that any debt that's related to those fixed assets, bonds and installment purchase agreements, leases, payables, deferred gain, bonds payable related installment agreement, settlement agreement. So there's your net invested in capital assets. So you can go to a listing of all these capital assets. You can see these debt instruments that result in the net invested in capital assets. Everybody's favorite footnote, which is now only one small paragraph. Footnote number 16 talks about coronavirus. Hopefully that's behind us now. And then you will see the opioid settlement discussion here on footnote number 17 and the various conditions of that litigation. All right. So that went through the basic financial statements and the footnotes. Okay. MD&A we talked about, that's not subject to audit. Basic financial statements we've been through, the footnotes we've been through. Next section, we only have a couple left, I promise. Page 79. Remember those 12 pages of footnotes we avoided in reading for the pension? Here they are, page 80. The double underscore 1, 2, 3, 4 from the bottom. This is the net pension obligation that the county carries on its books based upon the audit that MERS has of your plan. So MERS is the auditor of the plan. The plan has their own actuaries. You get little to no input into how this fund operates, but you are required to report the result of that pension. So if I'm in your chair, what do I want to know? Fourth from the bottom, you have an $8.4 million obligation under the MERS pension, which went up substantially from the prior year. Why? Middle of the page, net investment income or loss is an $8 million swing. You have been humming along in 19, 20, and 21 with some good investment returns. Boom. Laid an egg in 2022. What does that do? That raises your pension obligation.
What did MERS bring in? Not the projected 8% then? Don't know.
I don't know the answer to your question, but it's certainly not 8% when they had an investment loss of almost $3.5 million.
Would you repeat the question? I didn't hear it.
Oh, I'm sorry. I didn't know what MERS brought in. They had projected 8% interest, but clearly we didn't get 8% interest. Yeah.
And you would have to have, what's his name? Is it Tony? Does Tony still come up here? Tony would have to come up and answer those specific questions for you because they use a blended investment return theory. So I don't want to speak towards it because I don't know how it works. I can tell you when they have the audit done, we take their data from the audit and it rolls into here. If you go across on page 81, when this GASB was adopted in 15, there was an investment loss. In 18, there was an investment loss, and then not again until 2022. But you see that your liability goes up every year. There's an investment loss. So that's the first thing I want to look at if I'm sitting in your chairs. Where are we on the pension liability? And then third from the bottom is what percentage is covered, what percentage of that obligation is covered by assets. So you guys are moving right along. Started at 77.4 and 15. You got it all the way up to 95.4 in 2021. And then because of the investment results of the plan in 2022, you're back now down to 77.8. That can change just as fast in 23 as it did in 22. So I'm not here to tell you the sky is falling, but you need to pay attention. Those are the numbers that are the ones you want to pay attention to in here. All the footnotes talk all about the actuarial assumptions, the population of the people that are in the plans, et cetera, et cetera. That's all good reading. It's required under pension reporting. But if you want to save yourself from all that reading, this is the footnote. This is the table you want to spend some time in. This report will go out until it's 10 years in its presentation, and then every year the older year will drop off as the new one comes on. All right, the second piece of this is on 82. What you want to pay attention to here is the second column. The actuary of the plan determined you should have this dollar of contributions sent into the plan. That's the first column. The next column is what did the county pay? So the actuary said $1,055,000, the county paid $1,305,000. You have consistently paid over what the actuary has requested since 2015. I think you are my only client that has done it consistently since the GASB was adopted. So hats off to you guys on this. You're working on getting that liability down. Unfortunately, because of investment performance, didn't happen this year. Okay. The covered payroll and the contribution to the percentage of coverage payroll, that is simply statistical data that I don't put a lot of thought into. You may, from the audit perspective, that really does not have any input. Page 84. This is going to be your road commission, exact same format. Third line from the bottom, $780,000 unfunded portion of the road commission's liability, 91% funded. You'll see they also went from 108% funded down to 91. What is that? 17-point drop in 2023, similar to what you saw for accounting. Page 86, exact same format again that we had for the county, talked about the actuarially determined contribution, what they paid. They've consistently paid over what they were required to pay, very similar to the county. Page 87 and 88, these are the cliff notes of the various assumptions, mortality tables, and so forth that were used in the determination of the MERS obligations. Most of this is a cliff note of the 12 pages that we gave up earlier over here on page 87 and 88. All of those statistical tables there are the other element of this audit report that are not audited by Raymond. They are audited by other audit firms. And we put those into our financial statements as given to us by their auditors. We're getting close. Page 89. We went through all the big financial statements on page 89. This is where there is a tremendous amount of minutia required to be reported as such, but you've got your non-governmental funds on pages 90, 91. You've got your non-major special revenues that go on 92, 93, 94, 95, 96, 97, 98, 99. Again, there's a lot of very detailed stuff. I don't spend a lot of time in here. If anybody gets in there and they have something they want to talk about, I put a business card on everybody's plate here. I'm happy to answer whatever question, but again, we could talk for months in those schedules. Those all roll up to the financial statements we talked about at the beginning. So everything in there does consolidate up to the front. All right, page 100 and 101. Again, these are going to continue to roll out all of the minutia or the smaller funds, the non-material funds as defined by the Governmental Accounting Standards Board. And those will conclude on pages 118. A word you've heard me used here a little bit is the word materiality. I'd like to talk about that for just a minute. Materiality to me means something very different than anybody else in this room, very likely. When you engage us to audit the financial statements, we issue an opinion that we say that these are not materially misstated. There are there's some complex, some non-complex calculations as to what materiality is. I would expect internal people in the county to care about $1. Your audit firm doesn't care about $1. We have to have the work done on your financial statements to make sure that they are not materially misrepresented. Every one of these funds in here has a materiality threshold that is examined during our planning process. So the bigger the fund, the bigger the number is in materiality. So general fund probably has the highest level of materiality, right? And it does. Some of these really small ones in here, they're really small. Because you can't have a fund out there that only has a few $100s of activities. It can't be $100 off. That's material. So materiality internally is different than materiality for your external audit firm. And it's important to note that when you get to the audit report, it talks about the fact that we believe these numbers are not materially misstated. Are they exact? No. If you want us to examine every single transaction, number one, you wouldn't want to pay the bill. Number two, I don't know if I have the staff to do it all. You've got millions of transactions that happen at the county. We select samples of these transactions. And from those samples, we draw extrapolations to transaction classes. Okay, so there is always a risk that there was something that was wrong that we missed. There's always that risk. And we defined that in our engagement letter when you first saw that back in November and December of 2022. But we believe that we have audited and examined every one of these funds, and we believe that they are materially accurate, or not materially inaccurate is the language I'm supposed to use. And we'll talk about the report here in just a minute, but I want the folks to know that people internal have a very small amount of materiality. They will chase pennies and nickels on bank statements. They'll chase missing checks. They'll chase pop fund deposits. They'll chase coffee funds. They chase virtually none of that is what your audit firm does. We stay where the numbers are high, with the big numbers, where the big frauds can occur. Because I've never had a client who's had a fraud because of a coffee fund. But I've had clients who have had fraud because people who have access to the general ledger through the general journal. They can create fraudulent financial statements. They can create bank wire transfers, et cetera. And they don't do those at 35 cents at a time. If someone's going to do that, they're going to do it big. So that's what we hunt for. And that's why we use the word material relatively fairly often in these presentations. Any questions about materiality? All right, let's wrap this.
Just have a comment.
Yes.
I'm glad that we watched the nickels and dimes.
100%. Yep. So that's an interesting comment. And thank you for saying that, because when we come in and do an audit for a client, if the client doesn't care about the nickels and the dimes, we have an assessment in our overall engagement risk that talks about tone of the top. If the tone at the top is not sufficient to create accurate accounting records, and if it's pervasive enough, we will resign from the audit. But Leelanau County has always had a high tone at the top, and I don't anticipate that changing, but that is one of the elements that we will internally talk about during the planning of the audit as to what is our tone at the top? Is it sufficient enough to create good accounting records? Okay, I lied to you. That stuff ends on page 128, not 117. All right. 129, we're getting there. There are three basic levels of auditing standards that audit firms follow. One is generally accepted auditing standard, and one is generally accepted governmental auditing standards, or a yellow book audit. And one is audits for uniform guidance, formerly known as the single audit. Okay. Leelanau County follows a yellow book audit. So we are required to file to do our reporting on the generally accepted governmental auditing standards relevant for this year. What is it? What are those? Are they different than generally accepted auditing standards? They are. They are a little bit different. They're not materially different in terms of procedures we perform on the balances, but what happens internally. Any firm that is going to issue opinions under the governmental accounting, or the governmental auditing standards, has to maintain an extremely clear line of independence. So whether it's Leelanau County, or whether it's Wayne County, the city of Detroit, city of Traverse City, I can't have any family member in control of financial documents of the county. I can't have a financial relationship with the county. If you're doing a joint venture, I can't be on the other side of the joint venture that you're investing in. So the independence in the yellow book audit is higher than it is in normal audits. But the biggest item is continuing education. A CPA can be licensed in the state of Michigan by getting 40 hours a year and getting your license renewed for 40 hours of continuing ed a year. That does not work in the government world. There are certain classes you are required to have in governmental accounting. So I can go and I can be a licensed CPA all over town. I can't sign a yellow book audit until my CPE is correct. So many of our governmental folks, myself, Paul, the staff that works on this job, they'll get 60, 80, 120 hours a year to stay current on what's going on here and also in the other areas they work. So yellow book audit, two biggest differences are independence and continuing education of the audit firm. And then also there is a report that's issued that's on page 131 here that we're going to talk about. This is a report that's issued with respect to the yellow book. If this was a regular, generally accepted audit, auditing standards audit, this would not be present. This is a generally accepted governmental auditing reporting opinion. And if it was a single audit, you'd have 3 more opinions. So this is also where your findings will reside. So 325, I'm doing pretty good. All right. Let's talk about what this means. We're not going to read it because we can all read. The first paragraph talks about the financial statements that you engaged us to audit, which is 12/31/22 of the county. We talk about the report on internal control over financial reporting. Under governmental auditing standards, we are required to get a more detailed understanding of the internal controls surrounding financial reporting. Okay. So you'll read in these paragraphs what the audit firm did. Second paragraph talks about the various reporting. When you report a finding, you've got one of 4 buckets you can put it in. A material weakness, which is the most severe, a significant deficiency, which is the second, a control deficiency is the third, and an other matter is the fourth. So these are all defined. 111, top of page 132, bottom last sentence in the paragraph at the top of page 132. We did identify certain deficiencies in internal control described in the accompanying schedule of findings and responses as items 2022-1 and 22-2 that we consider to be material weaknesses. Okay, so those are the big findings. That's the bucket that we can put it in. Are you the first client we've ever had this? No. There are several clients of ours to this very day that get material weakness findings, and sometimes they're repeat findings, and there may not be a cost-effective way to remove those. So just because you have a material weakness finding does not mean the end of the world. Okay. Next paragraph under report on compliance. If you go to the last sentence in that paragraph, the results of our tests disclose no instances of non-compliance that we require to be reported on governmental auditing standards. This gold star. The county has responded to the findings, and that's the required language for that. And the purpose of this report is defined there at the bottom of page 132. Again, this is the yellow book audit opinion. So let's talk about our findings. 133 and 134. Preparation of financial statements in accordance with GAAP. Some time ago, shortly after the Enron debacle, the audit standards changed. It said every client under audit must be able to produce this document with its internal staff. That was my profession's reaction to the Enron crisis. So everybody who works in the county here has to have the education, the training, the license renewal to produce this document. Very, very few of our clients have that. It's expensive to hire that. It's expensive to keep it licensed. Many of our clients, most of our clients will outsource the preparation of this document to the audit firm, which is permitted. And once it's done, we put it in the hands of the county. They will review it, understand it, and take ownership of it prior to us issuing our audit report. That is what 133 says. Under condition. County has historically relied on its independent auditors to assist in the preparation of the government financial statements and footnotes as part of the external audit reporting process. County's ability to prepare financial statements in accordance with GAAP is based in part on its reliance on the external auditors, who cannot by definition be considered part of the internal control. Under cause, this condition was caused by the county's decision that it is more efficient to outsource this to the external audit firm than to either hire a CPA currently licensed, yada, 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 pay all that money. The effect, as a result, the county lacks complete internal controls over the preparation of financial statements in accordance with GAAP and instead relies in part on the external auditors. You'll see the response from Leelanau County that follows that. This has resided in your financial statements since the Enron debacle, so this is not one that's going to go away unless the new Chris, is that Sean, sorry. I don't know what your credentials are as far as your licensing and so forth, but this may go away if Sean has appropriate licensing, understanding and so forth in the governmental accounting world. That may eliminate this. But this is not a punitive finding. This is simply a requirement under the new auditing standards. And again, you've lived with that for a long time. Page 134. Talk about this one for a minute. Finding type, material weakness and controls over financial reporting. Criteria, management is responsible for establishing effective internal controls to safeguard the county's assets, protect or detect misstatements to the financial statements. Under conditions, we observed instances in which the county's internal controls over various finance functions were not operating as designed, and instances in which segregation of duties were not achieved. Specific areas are noted as follows. Accountants are notorious, well, they're not notorious. They want segregation of duty. That is the quickest and easiest way to settle internal control matters. Is if you guys are all doing different parts of a transaction, in order for fraud to occur, there's got to be collusion. Very rarely does collusion happen, and when it does, it's big numbers. So this, most you can segregate the duties, have more people doing different parts of functions, the higher the grade of internal control you're going to have on your internal control system. So let's talk about the items that we unearthed. During our journal entry testing, we observed that 1 out of 10 journal entries selected for testing was not properly reviewed and approved. Most fraud that occurs in clients occurs in the general journal. This is where it happens. So when they're not properly reviewed and approved, they need to be obviously reviewed and approved by people who know what they're doing. If you ask me to sign off on a medical record, I wouldn't know what I'm doing. I can sign off on journal entries because I understand that. So it can't just be somebody who is in a position of authority. It needs to be somebody who knows what's going on with this. So this needs to be fixed quick. Second item, during our payroll walkthrough, we observed the payroll registers were not being independently reviewed and approved. Again, review and approval. We also noted instances of various errors in the payroll process and periods during the year in which certain payroll controls over payroll were not operating as designed. Governments are designed to collect taxes and pay primarily payroll. Their biggest expense is payroll. So we're going to spend time in payroll during our audit. Having said the first 2 items on here, I'm keenly aware of the transition that occurred in 2022. And in talking with your prior administrator and members of the staff that were out here, we were going to be tolerant of the transition. And I think we were tolerant of the transition, but we still have to let you, the board, know what we found. We'll talk about remediation plan in a minute, but you need to know what we found. Third item, during our delinquent tax cash receipt walkthrough, we observed that all receipt journals are not being independently reviewed and approved. Are you guys picking up on the theme here of independently reviewed and approved? Okay. The fourth one, observe that 1 out of 2 quarterly 941 selected for payment or selected for testing lacked proper support for compensation amounts listed on the form. So some edification on that. I know you're not a tax paying organization, but that does not mean you are immune from our friends at the IRS. So penalties related to 941s are expensive. They come up quick and they're high dollar. So there also is an effort within the service that many governmental units, IRS doesn't collect income tax from you, but they do collect payroll taxes. They can come in and do a payroll tax audit. Don't want them to do that if the reports are not supporting your tax returns you're filing. Second to the last, we observed that various credit cards and PayPal account purchases were made outside of the county's normal procurement policies and instances where these purchases were not approved by the Board of Commissioners until months afterwards. You should have this stuff approved during claims and accounts prior to disbursement. I don't think anybody here would be in disagreement with that. The last one, noted that credit cards were being used by various individuals other than the authorized card holder. I think that's self-explanatory, and I would hope that that would be a matter of highest regard to fix going forward. What caused these bullet points? It was caused by a lack of oversight and review and by turnover within the county finance department. I think we have a solution underway. The effect, the county is exposed to an increased risk that misstatements or misappropriations may occur and not be detected by management in a timely manner. Now, you guys got to worry about management detecting it. We have to worry as an audit firm, did we get it all? So we designed testing, we think we got it all. We're very confident that we have it all. But again, we didn't audit every transaction. So there could be other transactions out there that have issues to them, not material, but that could have issues. We recommend that the county implement policies and procedures to address the above areas of concern attributable to the internal controls over the county finances. Further recommend that segregation of duties be maintained wherever possible and that independent reviews and approvals take place timely and evidenced by writing. And the county agreed with these recommendations.
Thank you.
Now, real quick, a couple things left. First of all, does anybody have any questions on those findings? I know Commissioner Wessel started out our discussion about some of the matters that came up during the audit. We had some issues. Does this happen in a period during transition? Yes. The most important thing is where do we go from today to get clean audits? Yes.
Can you explain to me real quickly again what that 941 is?
Now, the 941 is a tax form that is filed with the IRS every quarter that reconciles all the pay that you have paid employees, federal income tax that you withheld from them, that you put on deposit at the bank to make sure that you paid the taxes timely. All right. So yes, thank you. I'm sorry, I just roll over those numbers because I hear those numbers all the time, but.
So for payrolls, we got big problems because the right tax was not paid.
Correct. And they are not forgiving
Yes.
on payroll taxes at the IRS. Yes, ma'am.
Which leads to a question, Steve, is there financial liability to the county for these findings? And when will we find out if there are any?
It is my belief, that your 941s were filed accurately. If they were filed with material inaccuracies, the IRS is almost certainly going to figure that out and send you bills. So I can't give you any level of certainty or uncertainty as to if you're going to get penalties. If you're short on taxes, you're going to get penalties.
I can answer that. Both Kathy and I work with the treasurer's office. We had corrected the 941 that was missing, and we were able to get the funds that were overpaid back to the county, and that was used as revenue back to us. So that is taken care of.
For overpaying your taxes, you don't get a good start, but if you're underpaying.
I just wanted to again reiterate how grateful I am to the team that worked diligently. The clerk's office, Kathy, of course, I know she was doing payroll audits before that. And everyone who rallied together in December when we realized that there were issues, and the effort that was made to make sure that we had best potential audit we could, recognizing some of the challenges that we had. So I just wanted to again reiterate the value of that and how we're very fortunate to have a wonderful team.
I've been with the county for a long time and, you mentioned it earlier, Ty, there's been some controversy up here and we are here to help you get out of that and move on to a new greener pastures, if you will. None of these are items that I believe we'll see again next year. Having said that, we have a responsibility in our governmental auditing standards to go back and make sure that those are fixed. So we will be visiting all of this stuff again next year, because I would expect one or more of you to ask me what happened to that stuff last year and was it fixed?
So with that said, what was this, none of this was on last year's audit? Out in 2021,
2021 was, we didn't have these issues.
didn't have any of those
We
issues.
did the ones.
What's that? Yeah, we had the first finding, 2022-01, which you've had for years. But as far as the bullet point items listed on page 134, we did not have these.
First time.
Yes.
Yes.
So the good news is I echo our administrator's comments on that. The good news is that these are procedural, very easily correctable, and we're already on the ball clearly with that. So you're going to go on to, are you going to cover what, or will we just move on from here? Some of what,
I believe your county administrator has a corrective action plan that will be used to.
okay,
Okay, so now if this was so remember we talked about the 3 levels of audit standards, the basics, the mids, and you're in the middle level. Had we been in a single audit, you would have had to list a corrective action plan that went in with the filing with the federal government. So we're not in that end world right now.
Right.
But a corrective action plan that shows independent review and approval of different people performing different functions. That is your biggest safeguard to this. So you may have to spend some time doing review and approvals, treasurer, clerk, finance. You're gonna have to work together to figure out what level of expertise is the right person to sign off on this stuff. But I can assure you, we'll be testing that next year. And whether it's Raymond or the next firm, if I follow a firm, I've got to look at the findings from the last year and I have to, if I'm a new auditor, I have to reconcile them. So they don't go away until they're fixed. So challenging year. We can certainly get over it and make it better for 2023.
I just have a question from early on, but you mentioned management's discussion and analysis, and that you don't audit that, but that you look at it for accuracy. So I'm just trying to understand, I look at 25 or either the cash base or the accrual base expenses. I'll go to 25 first. I look at total expenditures for the county on page 25 of 19,500,000.
Yep.
And then I go to page 9. I look at total for 2022 of 21,665,000.
Yeah, well, where are you?
I started page 25, total expenditures.
19, yep,
Total,
19.5.
Yeah, I don't know, 7 or 6 or 7 up from the bottom. And then I go to page 9, management's discussion.
Yep.
I'm total under page 22, again, I'm at total expenses, 1, 2, 3, 5 up from the bottom.
Yep.
And
So 20 million.
21,665,853, and when I look at page 25, I have 19,500,000.
Okay, so you're doing you're doing apples to oranges a little bit here. So the column on page 9, the 22,665 includes governmental and business type activities. So you're crossing over between separate segregated funds. On page 19 is just your governmental funds, not including special revenue, capital projects. Again, this is a consolidation of several dozen funds. So the 19.5 that you see in 25 will reside as a portion on page 9 under the 20,738,000. See that under column 22? So in that 20,738,000 includes that 19.5 plus all the non-major special revenues, capital projects, the non-major ones, the smaller ones. That would roll up to that 20,738,000.
So they'll consolidate it equal.
Correct.
Okay,
Yep.
and you looked at.
Yep, yep. And there's a whole massive pivot table that we will end up working with management and determining these tables. These tables all spit out of a pivot table in Excel. So everything rolls up together out of the general ledger, out of the county.
So page 9 does connect to the rest, it's not all there. That's a comprehensive look at the total thing.
Correct.
Which I guess my only comment is when I look at page 9, I look at total for 2022 at 21,665,000 and the total for 2021 at 17,489,000. Increase of 24% year over year.
Big cost of that is your pension cost. Remember, your liability went up, so you have to put that, your liability goes up over here, so you got to put that debit somewhere. That ends up in compensation expenses.
That would be under just our contribution.
Correct.
Not under the liability.
Well, there's a change in your liability, part of that ends up passing through expense. It's a portion of it, not all of it. It's a portion of it that passes through expense. If your liability goes up on one side, that's a credit. Your debit's got to sit somewhere. And the debit sits in compensation on the expense side.
Right, but that would be our contribution amount, right?
In addition to your contribution, because your contribution is cash basis, the liability is accrual basis.
Just don't see it in the numbers.
Yeah.
Here it's shown, but
No, and if you and I want to have a sidebar and walk through some of this,
Yes.
I'm happy to have you come into my
it'd
office.
be interesting to know how much of that increase is due to that liability.
Yep.
So that's, I guess, a number I'd like to see.
Okay.
I mean, operationally, you look at that, that's one of the things, when I look at numbers, I look at where am I and where am I heading?
Yep.
And I'd like to know how much of that difference is related just to the pension side and how much is just operational.
Right, I'll get that answer for you.
Thank you.
And I can get your contact information from Deb.
Yeah, I think you give it to the whole, you send it to Administrator Allen.
Okay.
We can work on that and
Okay.
just to read it to everyone.
Is that raises, the extra, I don't know what to call it, bonus, new employees, is all that part of it?
Oh, yeah.
There was a report that was generated. I think the clerk's office put some information together and I had also put some information together. So there was some validation to that. So between that and the pension issues, I think combined kind of addresses some of that. So you do have some of those, some of that information that's provided for you.
I mean, specifically, if you just subtract
Whatever that part
pension
was.
out of there, you have the
Yeah.
numbers you need to work with, so.
Should be
It's
close.
very, with big swings in this MERS pension obligation, it can distort financial statements quickly. And we'll get you that information, Commissioner Rex wrote, exclusive of what the cost of the pension is in this piece here.
Or just give me what piece of that is pension.
Yeah,
I guess is
okay.
the easiest way to do it.
And I'll work with Deb on that for you.
Thank you.
I just have 2 items to go through and they're a lot easier reads than we've been through so far. You go back to page 1, 2, and 3, and 4. This is our audit report. Okay. So we talked all about what we were supposed to do. This, I'll tell you right here what we did. First paragraph talks about the financial statements you engaged us to audit. That was the 12/31 county financial statements. Next paragraph, that's the opinion. So let's talk about that. In our opinion, the accompanying financial statements referred to above present fairly in all material respects, the respective financial position of the governmental activities, the business type activities, the discretely presented component units, each major fund, and the aggregate remaining fund of the county as of 12/31/22, and the respective changes in financial position and where applicable cash flows and the budgetary comparisons for the general fund and each major special revenue fund for the year that ended in accordance with accounting principles generally accepted in the US. That is a very long sentence to tell you this is an unmodified or a clean opinion. Okay. This is the highest level of assurance that accounting firms can put on financial statements, unmodified reports. We've talked about a lot of what remains in this report, the basis of opinion. We talked about that, governmental auditing standards. Top of page 2. It's important for you as a board to know that the contents of these financial statements are not ours. They are the county's, and that's described in those 2 paragraphs. The next part on page 2 talks about the independent auditor's responsibilities in relation for doing the audit. So if you go down here, you'll see some bullet point, exercise professional judgment, identify and assess risks, obtain understandings of internal control environments, evaluate the appropriateness of accounting policies on to page 3. Conclude whether, in our judgment, there are any matters that would leave us to believe that the county would not continue as a going concern. Clearly, that's not an issue. I think Leelanau County will out-survive most, if not all of us. I'm sorry. So if, you got me a little rattled there, sorry. Second paragraph from the top, or on the top, we are required to communicate with those charged with governance, other matters, plan, scope, and timing of the audit, significant audit findings, and certain internal control related matters that we will identify during the audit. We've talked about the findings already. Under required supplementary, this talks about the MD&A, the management's discussion and analysis, as well as the basic financial statements that appeared after the footnotes. If you go, I'm sorry, back up, this MD&A and the MERS pension tables are that's what this paragraph talks about. So if you go to the last sentence in here, we do not express an opinion or provide any assurance on that information because of limited procedures did not provide us with to express an opinion based on there's not enough sufficient evidence. Supplementary information, that paragraph talks about all the little financial statements that appear after the pension tables. You look at that last sentence, in our opinion, the combining individual financial statements are fairly stated in all material respects in relation to the basic statements taken as a whole. And then that last paragraph at the top of page 4 refers the reader to the internal control report that is at the very end of the document. Any questions on the report? Everything is issued with, it's in draft with the dates not completed. As soon as you've finished the review of internally, all finished the review. So we are ready to go to press when you tell us to go to press. This is due to the state by June 30th. And we will have this timely filed. Once you give us the thumbs up, we'll go to final print. This will all be on letterhead, signed reports.
And you are coming back to board meeting. And so if we have follow-up questions, we can raise them at that time. And
would you like a 2-hour presentation next week?
You don't have to read every word.
No. Well, and seriously, I can do this in 3 minutes. You know, I can do it in 5 hours.
We want the audience to get an overview of the audit.
Right. Okay.
Any, yes.
Okay, so in summation, we are on the right track and you're aware of all the new elements that is working up here and what we're doing and you're working with everybody.
I believe I am aware of all the new elements. Occasionally I get a surprise out of my friends up in Leelanau County, but I'm hopeful that with dialogue with the county administrator and then Sean now as the new member of the finance, we will work with you any possible way we can to make sure you're successful.
Thank you.
And if I could add, we've engaged Raymond in an agreement now post-audit to have a consultant assisting us to establish the proper policies, procedures, and operational elements to make sure that we are doing the correct things.
Right.
I feel confident we are moving forward in that direction.
Great. The very last item is this. Did you pass this letter out to everybody? Okay.
Yes.
So the long and short of that, this is a conclusionary memorandum to the audit. So we'll just spend just a few seconds here. Under our responsibilities in relation to the financial statements, just says I issued an engagement letter on January 20th. And I said we were going to do A, B, C, and D. I'm here to tell you that we have concluded our audit procedures. And subject to the board's approval, we will issue this document, go final, and get it filed with the state. On to page 2, the plan, scope, and timing of the audit. We concluded internal planning meetings on March the 10th. There were not any material modifications to that planning schedule that were client induced. So we were able to stay on track from the audit internally. Under compliance, everybody in the office has complied with independence and firm-wide. Significant risks that were identified related to the county's internal controls, such as relevant approval, knowledge and approval of journal entries and so forth, which we've already talked about. For qualitative aspects, significant accounting policies, we ran through all those. Talks about the adoption of GASB 87 for leases. There were no other matters that came to attention in the accounting policies. Under significant accounting estimates, first bullet point, we talk about the material estimates that are embedded in your financial statements, depreciable capital lives. On to page 3, accrued compensated absences, insurance claims incurred but not yet reported, and then discount rates on leases. Those are the material estimates in your financial statements. And if you look at that next paragraph, we evaluated those key factors and assumptions, and we are comfortable that those estimates are fairly stated. There were no significant difficulties encountered during the audit. Uncorrected and corrected misstatements. We talked about that in the finding of in the findings in the back of this document. There were no disagreements with management. Attached to this, I think it's a 5-page letter that is the representation letter that management of the county will sign, basically telling us what they have given is accurate and honest to the best of their knowledge. On to page 4, and we are not aware of any consultation with other independent accountants. If so, the standards say that you're required to let us know so we can make sure that the fact pattern delivered to the two firms must be the same. The conclusions could be different, but the fact pattern needs to be the same. Other significant matters, findings and issues, we talked about the findings already. We talked about the other information included in the financial statements. Under upcoming changes in accounting standard, we'll get to that in just a second here. You'll see on page A1, these are general internal comments and recommendations. These do not rise to the level of a finding. These are simply recommendations that we would like management to consider. The county has an information technology resource policy in place. We observe the policy has not been updated since 2013. Given the ongoing cybersecurity threats and evolving IT environment, recommend the county update its information technology policy to consider current day IT trends and threats. One thing you should know is a lot of these insurance companies that are doing cyber insurance, read this fine print, because if you aren't doing what they're telling you to do to maintain their coverage, and if you have a claim, you will not have coverage. So there are certain things that they require a third party IT firm to come in and try to break into your system. I mean, it's very, we've had a client that in the Upper Peninsula that had, I don't know, several $100,000 that were stolen. And they did not keep up on their IT insurance. So don't just think if you have IT cyber insurance that you're done. There needs to be compliance with what those requirements are. Yes.
I'll just share that MMRMA has now, I think it's actually working with Brendan. I know you guys have done some training things. We've recently sent our IT technician to some of those training components, and you will most likely be seeing some things in front of you as the board in terms of upgrades to our security. So we're taking that very seriously.
Yes.
So thank you.
That's a huge risk right now. And then finally, Noted the county has a line of credit with Amazon. In order to ensure or to issue certain types of debt, a local government needs explicit statutory authorization to do so. That means the state has to sign off. For counties, townships, cities, villages, no statute allows them to enter into lines of credit. Recommend the county evaluate its current borrowing arrangements for compliance and review applicable state statutes before entering into any of these type arrangements. So don't do this.
How's the county credit card done that, not a line of credit?
If you have board resolution, the board approves it, the board approves the balances and the expenses that are paid on it prior to the settlement of the statement. You're all right.
So we're doing that through
Claims and accounts. Yeah.
Okay.
You just can't. I mean, you know, if it's a $200 line of credit, this is the same thing as the expenses in the budget.
Mhm.
It's against the law. Can't do it. So now if you go and you have your attorney, draft the proper resolution for you guys all to sign and do agree to, and then you have the bank or the creditors sign up on their side, then it's a legitimate borrowing. But stuff that's done away from you as the board is no. Okay. Yes.
So I'll just emphasize that the credit cards that are currently in use are credit cards that are based on individual credit and not lines of credit. The previous credit card that was established has been canceled, as has been the Amazon. So both of those issues have been resolved.
Right. Sorry, I should have added that. All right, and then lastly, B1, these are your upcoming accounting standards, as if we haven't heard enough of those. The only one that's going to affect the county is GASB 96, that second one, which is basically, as Paul mentioned earlier, it's going to require lease-based accounting for subscription-based IT arrangements. That can be expensive for a county. I don't anticipate this being material. And then the last one, 101, compensated absences. You guys already use compensated absences, but there'll be a little bit of a change in the disclosure for that. Those are the only two that are on there that are going to affect the county. And then the last 1, 2, 3, 4 pages is the representation letter that management from the county will sign, get to us, and then we'll put dates on all this, put it on letterhead and sign it and file it.
Thank you, Steve. Any final questions for Steve? We will see you at the follow-up board meeting.
It's Tuesday, later in the agenda,
13,
Yep.
yeah, I think close to
11 o'clock or so, 11:15.
Thank you, Steve.
You're very welcome. Thank you, one and all. I know it's been a long afternoon, especially listening to accounting for 2 hours.
Oh, it's exciting.
Oh, yeah. If you guys didn't fall asleep, I give you credit.
Don't have you come to the evening meeting.
After a heavy dinner, right?
Yeah.
All right, thank you, guys. I appreciate your time.
Thank you so much.
Yep.
At this time, as soon as Steve excuses himself, we have our second public comment section on the agenda. If anybody would like to make public comment? Yes. Steve?
Good afternoon.
Good afternoon.
A very revealing audit. We are astounded. What were the conditions that caused us to get to this point? What all these difficulties we're having? Because I can never recall ever for the many 30-some years I've been attending these meetings to have such an event take place, explaining a situation that appears to have been self-induced by county commissioners on May 11th, 2021. I'll have more comment on this later, but it astounds me that a prior commission and this commission even continued the process in its confusion. And we believe that a serious effort must be made by this commission to present the taxpayers an accounting for what got us into this situation, all the costs and all the conditions that may have caused it, so we will never go down this road again. Because what happened was totally based on an emotional decision, all based on emotion to harm another person. That cannot go on and should have a thorough examination by this commission so that people can understand what occurred here. Thank you.
Thank you. Thanks, Steve. Any other public comment? Thank you for attending today. Any commissioner comment? Yes, Doug.
Yeah, unrelated to accounting, but I think it's appropriate on this today, the 79th anniversary of D-Day, that we honor the 10,000 casualties and valor of the people that fought that day, continue to fight. It's a fight for freedom, and we're all thankful for the results.
Yes. Any other commissioner comments? Yes.
No matter what happened in the past, right or wrong, before this weren't here, we're on the right track. We're going to make it better. We're going to fix what this will.
Move to adjourn.
So moved.